Hi everyone, this is Ted Bauman of the Bauman Letter. I was trained as an economist, and one of the things that economists tend to do, a habit of thought that we tend to develop, is to try to look for connections between things. And in that respect, I'm always interested in what the current state of the economy that is facing younger people is going to imply for those of us who are close to retirement or early in retirement, and who are probably going to be investing in companies and in other asset classes that are going to be selling things to the people who are young today. Because I think this is a hidden problem that we don't always understand. Well, first of all, there's a recent report out that basically says that young people, people who are under the age of 30, are spending more money now on rent when they are young than any generation before them. Essentially, they're spending as much as 45 to 50% of the income that they get from work just on renting accommodation. Now, it's worth noting that the standard rule of thumb in housing is that if you spend more than 30% of your income on housing costs, then you are what's known as housing burdened. In other words, you are paying more than you should for housing. Well, if you pay more than 50%, you're considered to be severely housing burdened. So essentially, we have an entire generation of people here in the United States who are severely housing burdened in terms of what they must spend in order to acquire housing. Basically to move out of their parents' house and get started in life. Now, the consequences of that are pretty severe. One of them is that they can't save very much money for a down payment to buy their own house. So essentially, people who are paying that much in rent are stuck in an endless loop where they can't get out of rental housing, and they also can't buy a property simply because they can't ever accumulate a down payment. Another problem is that they have to devote so much of their money to accommodation costs that they can't pay off their student loans very quickly, or they can't invest in new businesses. Money that would be going into the next great startup is instead going into rental costs. Now, if you look at the issue from the perspective of previous generations, baby boomers basically spent about 36% of their income that they had earned under the age of 30 on housing costs. So there's a slightly different calculation there. 30% of your monthly income is really the target for spending on housing. But there's another question, which is how much did you spend in total of all the income that you earned during your youthful years? And in the case of baby boomers, it was about 36%. The so-called Generation X, which is the next generation after baby boomers, spent about 41% of their income. So it rose slightly from the millennial, or rather the boomer phase, but now we're up to almost 50%. So basically, what we're seeing is that a young person today who gets a job, goes into the job market and begins to work and earn money is essentially spending half of that money on rent. Now, the biggest problem, I think, behind this is not just the impact that it has on the young, their inability to save for housing, to educate themselves, to invest in businesses, but let's also consider where this rent is going. After the 2008 financial crisis, one of the biggest investment drives in the 10 years after that was for big financial houses to buy up houses that had been foreclosed and rent them out again as rental units. It's kind of hard not to be upset about that, because essentially the same banks that set up the system that led to the foreclosure crisis then turned around and bought those houses on the cheap, and now they're renting them back to people and making money. But effectively what we're seeing is a transfer of up to 50% of the income that young people are earning in their prime years, when they're supposed to be laying the foundation for a long-term prosperity, being transferred to companies who are essentially large financial institutions that have bought up most of the rental stock in the United States. Now, to me, what that suggests is that over the next 10 to 20 years, you're going to see a very different kind of economy to the one that we've become accustomed to. The United States consumer is always thought of as the main driver of the world economy because we buy a lot of stuff. And when we buy a lot of stuff, other countries have to make a lot of stuff that get used to make the things that we buy. Car parts, electronic components, things like that. Well, if people are struggling to afford the basics, if an entire generation of people is being essentially transferring most of their income into the pockets of big rentier companies who own all these rental properties around the United States, that means they're not going to have a lot of money to buy that stuff, which potentially threatens the stability of the global economy. So I think one of the things to keep in mind as you enter retirement is be careful when people say, that the future is going to be driven by the expenditures of millennials or young people. It's true that they do earn more on average than previous generations, but the amount that they are spending on housing is roughly twice what our generation had to pay for housing at the same time of life. And that means that the real issue here is not that they spend too much money on lattes or Uber rides or going out to dinner, but that they're having to spend too much on their housing costs. And eventually that's got to hit the companies that you and I invest in and hope to see returns from in our retirement. So keep an eye on this issue and be very careful, particularly when you evaluate a company for investment purposes, to see who its target market is. If it's one that is aimed at selling products of people of this generation or people just above, maybe 40 and 50 somethings, you're going to find that in the future, I predict these companies are going to struggle. And they're going to struggle simply because of the demographics and the way that the structure of our economy has changed. Unless, of course, we can get around to changing it somehow, which is still possible. This is Ted Bauman. I will speak to you again soon.